Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings. Today we're diving into a report from Portland General Electric, or PGE. It's about bonds. Now that might sound boring, but stick with me. Think of bonds like IOUs. PGE is borrowing money, and this filing tells us how much and at what cost. What could possibly go wrong? Let's find out. This report is dated March 25, 2025. It's called a current report, or Form 8K. Companies file these when something important happens that investors should know about. In this case, it's about a big financial deal. The main event here is that PG entered into an agreement to sell bonds, basically IOUs, to some big investors. The agreement is called a bond purchase agreement. This means PGE is borrowing a significant amount of money, $310 million. The bonds are split into three different groups, each with a different due date and interest rate. One batch worth $60 million is due in 2035 and has an interest rate of 5.36%. Another, for $50 million, is due in 2045 with a 5.72% interest rate. Finally, the biggest chunk, $200 million, is due way out in 25 and that one has an interest rate of 5.84%. These interest rates are the cost of borrowing money. The higher the rate, the more PGE has to pay back in addition to the original amount borrowed. PGE says they're going to use the money from these bonds for a few things: paying off existing debt, general corporate purposes, and capital expenditures. Paying off debt is like refinancing a mortgage. It can free up cash flow. General corporate purposes is a broad term. Capital expenditures are investments in things like equipment or infrastructure that will help the company grow or operate more efficiently. These bonds were issued under what's called an indenture of mortgage and deed of trust. Think of it like a contract that lays out the terms of the bonds and who's responsible for what. Computershare Trust Company is the trustee, acting as a middleman to make sure PGE follows the rules. The bonds can be redeemed or bought back by PGE before they're due, but they'll have to pay a certain price to do so. If you want all the nitty-gritty details, you can check out the 83rd Supplemental Indenture, which is attached as an exhibit to this report. It's a long legal document, but it has all the fine print about the bonds. This part basically says that the information in Item 1.01 details is important and relevant to understanding PGE's financial obligations. It's a way of emphasizing the significance of the bond issuance. This section lists the exhibits or attachments to the report. Exhibit 4.1 is the 83rd Supplemental Indenture. Exhibit 104 is a technical document related to how the report is formatted. Now let's step back and look at the big picture. PGE is borrowing $310 million. That's a lot of money. The interest rates on these bonds are decent, not super high, but not super low either. This suggests that investors see PGE as a reasonably safe bet. The fact that PGE is using the money to refinance existing debt is a good sign. It means they're managing their finances responsibly. However, taking on more debt always carries risk. If PGE's business slows down, they might have trouble making their bond payments. PGE's overall direction seems stable. They're a well-established utility company in a growing region. However, they face challenges like rising energy costs and increasing competition from renewable energy sources. The company's ability to adapt to these changes will determine its long-term success. One notable risk is that PGE operates in a highly regulated industry. Changes in regulations could significantly impact their business. One possible opportunity is the increasing demand for clean energy. PGE could capitalize on this trend by investing in more renewable energy sources. The company's ability to adapt to these changes will determine its long-term success. One notable risk is that PGE operates in a highly regulated industry. Changes in regulations could significantly impact their business. One possible opportunity is the increasing demand for clean energy. Overall, this bond issuance seems like a pretty standard move for a utility company like PGE. It's not particularly exciting, but it's also not alarming. The company is taking on more debt, but they seem to have a plan for how to use the money. While it's hard to say what their next earning reports will look like, the future is always uncertain for every company. Thanks for watching Corporate Decoder. If you found this helpful, please like, comment, and subscribe.